So what's up, guys? March Maxi Madness is happening right now, and our very own Steven Lupka is on to the second round. How's it feel, man? You're in the popularity contest.
You know, I made it through the first round, you know. It was a tough matchup. They gave me a 13 seed. I don't know what's up with that. Kind of insulting. I've taken it up with the editors at the Bugle. And they put me against Luke Dash Jr., hero of the block size wars. So, I mean, it was a tough matchup. But guess what? I won the first round. Narrow victory, which I have election integrity concerns about, because within the first 3 hours, there were 300 to 400 votes. There's 800 at the end. I had 70% of the vote versus him at 30. And then suddenly overnight, in the mystery of night, they come in and I wake up 51 to 49. I had a massive lead in the beginning. So I don't know. There's some questions there. We've seen this once before.
It was the South Korean vote.
Yeah, I mean, maybe he has a bunch of fans in Asia or in Europe. I don't know. Very suspicious. Regardless, though, 51 to 49, I won. I squeezed a victory there, which is a huge win for me. I'm now up against
the peak of your career, Steven.
Yeah, I mean, dude, winning even one round in Maxi Madness is a major milestone in any Bitcoin influencer's career. I mean, it goes a long way. I'm now up against Jeff Booth, though, for round 2. It's not looking good, people. So if you're watching this and you value this show and everything I do, please vote for me on Twitter, on Maxi Madness. You can go to my page, scroll down a little bit. You'll see the vote. I'm like 25 to 75 right now. It's not looking good. I want to at least have a better performance than that. So we'll see.
Dude, if you want to beat Jeff Booth, you're gonna have to write a book between now and next year.
Yeah, I've just, I'm gonna have to come at it. I mean, I'll be like, dude, honestly, the government would love deflation. It would allow them to print more money. What are you talking about?
All right, welcome back to Swan Signal Live, everybody. Thanks for joining us. We're here every Friday, 11 a.m. Pacific, 2 p.m. Eastern. We've got a rookie off the bench today, filling in for Brandon, Alec Bakush. What's going on, man? On the Swan private team over at Swan. Welcome to the show, buddy.
Thank you, guys. Stoked to be joining you. I always watch the show, so I've been a fan, and yeah, happy to be here.
Awesome. Thank you also to Mara for supporting and securing, I think it is, the Bitcoin network, and making it the most secure computer network in the world and in history. Pretty awesome. Thanks for leading the mining industry. We appreciate your support. John, happy Friday. How you doing, man?
Happy Friday, guys. I love the opening here. Alec, I know you don't have your name written here, but Brady mentioned it, Bakush, and it is March Madness. A lot of basketball is being played. I don't think I ever told you this, but I always thought your last name was perfect for basketball. You hit like a step back jumper, just yell Bakush, and then nail it. I'm sure you did that growing up all the time.
That was always my analogy. When you throw like a big rock into a lake, that's the sound it makes. Just like a bucket.
Nice.
I love it.
And then it ripples out like Bitcoin and affects all of human society.
There you go.
All right. We got tons to talk about as usual in Bitcoin. It's been an extremely eventful week. We had a Fed meeting. We've got a new product from Strategy. We've got, news on the M2 front, interesting development in Tornado Cash case. We've got Bo Hines out there talking about acquiring as much Bitcoin as possible. Trump addressing the Digital Asset Summit, saying that, again, we're going to become a Bitcoin superpower. Lots happening. We're going to get into it all. Let's kick it off, as we usually do, with John on macro and markets.
For sure. So bigger picture, before I get into some of the Fed meeting stuff, is kind of unchanged in the sense that it's basically been almost exactly a month where markets in general started selling off materially. Mostly U.S. stocks, mostly U.S. tech stocks, including the Mag 7, some of the best performers for years and years and years. They have given some of that back in the last month or so. Bitcoin also has given some of that back. Bitcoin and the Mag 7, they're probably down somewhere in the 15 to 25% range just in the last month or so. What's been causing that is, ironically, the new administration coming in, which a lot of people thought would be bullish for some of those assets. They are embarking on some new policies that the market does not really know how to digest. These are uncertain markets. Powell on Wednesday used the term economic uncertainty over and over and over again. And that's kind of what the market is digesting right now. We've talked about this a lot, but I just kind of wanted to set the table. That's really what the market is facing right now. Looking ahead a little bit, there's April 2nd. This could be a potentially big date. I would love to know what the rest of you guys think about this. We can do like a little prediction thing here. April 2nd is the date when Trump's retaliatory or reciprocal tariffs, I should say, similar concept, reciprocal tariffs go into effect on April 2nd. So I would be curious to hear what you guys have to say after I get through this little macro thing. What do you expect for the markets and for Bitcoin after April 2nd? Do you think it's going to be more one of these things, buy the rumor, sell the news type thing, where the volatility and the downside has already been priced in and then we rally after April 2nd? Or do you think it's going to be one of these things where people say, oh shit, there's, the tariffs are actually going in and we pull back even more? I'm curious what you guys think about that. But first, I'll just say on the Fed meeting, and we'll do this quick because, we're not Fed hawks here, but basically,
we're Fed swans.
What's that?
We're Fed swans.
We are Fed swans, not Fed hawks. Damn right. So basically, the Fed had a meeting on Wednesday. This is one of their meetings where they did not just interest rate setting, but also economic projections. They do the economic projections a little bit less frequently. So their last time they did those economic projections was December. They're doing it again now in March. They kept the rate the same, the Fed funds rate at 4.25 to 4.5. There's a 25 basis point range on that. They did add a statement that said uncertainty around the economic outlook has increased. And then when they did those economic forecasts that I mentioned, they slightly increased the inflation outlook, slightly increased the unemployment outlook, and they reduced the 2025 GDP forecast. But I did see something that was in kind of the headline release. I saw something after the fact that said, and I think this came from their commentary, that when they were doing those forecasts, they assumed the full effect of tariffs.
Yes.
Yeah. So yes. I think I may have even seen Steven was the one who posted about this. So
I'm sure big.
Yeah.
Finish what you're saying, but it's a key point.
Good. Yeah, I'll let you elaborate on that one in particular. The other quick stuff from the Fed was basically that the Fed is doing QT right now, means the balance sheet is coming down in size. They basically are slowing the pace of that QT. So, and they're doing it with treasuries. Previously, they were letting that line come down at 25 billion a month worth of treasuries. They're now going to let it come down slower at 5 billion max a month of treasuries. And then lastly, the Fed does this thing called a dot plot, where each of the Fed members says, what do they think the dots meaning interest rate levels are going to do later in the year. Basically, it shows that the median Fed member thinks there's going to be 0.5%, 50 basis points of cuts this year in 2025. So that just kind of lays the table. That's what we saw this week, macro-wise. Steven, I'm sure you have plenty more to add there.
You want to know what another word for the median Fed member is?
A midwit?
Mid-curve Fed member. Yeah, we're going to listen to the mid-curve Fed member? No, we're not. We're interested in the left and the right tails here. Yeah, no, that was really good. And you said the point that I was very excited to touch on, which is like, and this makes all the difference in the world. Every single one of their things assumed maximum retaliatory tariffs, which means they have priced in the worst case scenario. And if anything goes better than the worst case scenario, it's upside. And even this is the data point. I actually think this meeting was very supportive and dovish, because they basically said, even assuming maximum tariffs, even assuming all of these factors, we're not doing anything. And if it gets really bad, we'll cut. Powell basically came out and gave a soft Fed put that they're not going to let the market crash if there's a huge response to the tariffs and a growth showdown. That's still not my base case. I don't expect that will be the case, but markets really liked that meeting, right? It rallied after. We've sold off some, there's different factors, still volatile markets, but I think it was a positive, Fed meeting, and it was a far cry from the Fed being anxious about the tariffs and hiking rates, which, if you've listened to the show, I've been skeptical of the whole time. I've never expected that to happen, but many investors in the market did. So that Powell shot down, no recession, growth might go down a little bit, but it's not too bad. They're not going to hike. All of the panic, I think, got killed. The market may still be in a bottoming process, but I think that Fed meeting put the lows in.
On the tariffs front, and that makes perfect sense to me, that their anticipation of or pricing in the worst. What we saw with the Canada Mexico sort of back and forth was that this is really just a negotiation. And Trump, he wrote the book, The Art of the Deal. He's a negotiator. He makes deals. This is, to me, more like a deal tactic, a negotiation tactic with the world, saying, okay, we've got to balance this out. The United States is not being fairly treated, as you would say, around the world in terms of global trade. And so we've got to balance things out. And this is a lever you can pull on for negotiations in order to force better deals, in terms of trade, global trade. That's the way I started seeing it after, the pretty quick turnaround with the initial back and forth on the Canadian tariffs. Do you guys think that this is what's happening right now, that this is just a big negotiation and a global deal to sort of balance out the trade deficits for the United States?
I think yes, you could say yes. That's ultimately what's happening. I think the $1 million question is, how far are they willing to take it, and what are they looking to really get out of it? Is it they just want slightly better trade deals for the U.S.? They want to build a few more factories and wave a victory flag and say, hey, look, we did this, marginally better outcome for you guys, the American worker. Oh, and we got Mexico and Canada to secure their border better, so unwanted people and substances are not coming in. Is it more that, or the other end of the spectrum is they are really trying to reform the global trading system in a way that hasn't been done in decades, and they're like literally trying to get all of the industry that the U.S. has lost over the past 40 years. Are they trying to get that back? We could argue about whether or not that's even possible and over what time frame that's possible. But if it's the first side of the spectrum that I described, I think they're going to try to do at least that. And then I don't think we would see too much market volatility. If they try to go all the way and say, like, yeah, we want, all those manufacturing jobs to come back and we're going to do whatever we can to make it happen, then I think the market might freak out for a bit longer as they try to figure out what that means. Then it gets into the other $1 million question, which we have raised on this show, is what is the threshold that the Trump administration is willing and able to take in terms of duration and magnitude of the US stock market being down, 10, 20, 30% for an extended period of time. One thing we haven't talked about on this show too much is this concept of the US economy being financialized. Everyone knows it's painful just for stocks to go down because something like 60% of US households have stocks in some way, shape, or form. Brokerage account, 401k, IRA, pension, etc. It's not evenly distributed.
I was just going to say, it's important to note.
Yeah, it's one of these like 80-20 rule type things, or even, I think it's even worse than that. But they own it to some extent. And if it goes down 30%, even if you don't have a ton, that hurts. So Trump can't just ignore the 60% of households that own stocks, right? But it's even more than that, because the fact that the US economy is financialized is that a lot of tax receipts come from the market doing well over time. So if you can't have, in my opinion, today, two historic data points, one post World War II or during World War II, from 1929 to 1954, the S&P 500 was flat at an index level. That's a 25-year period when the S&P index was flat. That's crazy. The 70s was notoriously a bad decade for stocks. Not quite as bad as flat, but was a pretty bad decade. The economy we're in now, how financialized it is, I just don't see the Trump administration having the ability to go even like a year and a half, 2 years of really bad equity returns. I just can't see that happening, let alone 10 or 20 years. So I think my kind of max pain scenario would be that Trump is willing to have equity market and general market weakness and volatility for like maybe another 12 months. That would be a max scenario, in my opinion. And then he starts turning it around as we're in 2026, a year from now, the midterms start approaching. And then I think he's going to have to go with some policies that support markets a little bit more. And I'm fully open to it being much shorter than 12 months. It would not shock me if the markets start rallying because of Trump tax cuts, deregulation, backing off on tariffs in like 3 months. That wouldn't surprise me either.
It's crazy. I mean, just to put a number on it, I think it's about 20% of the U.S. economy is the financial industry. And that's gone up from, low single digits 50 years ago as we removed the dollar from the gold peg, associated with gold in any way, shape or form in 1971. And that's only increased steadily. And it's interesting that you say, the S&P 500 was flat for 20 years. And it's, seems crazy to us now, but that's because we weren't, pumping dollars into the system like we are these days. And it's really become the number one export of the United States. 20% of the economy is the financial industry. And we are basically making money on the exorbitant privilege of printing the global reserve currency and building a financial system around it, and then exporting so many other industries which have strategic importance, right? So it's a bit risky in that regard. Some might argue that globalization is actually more secure, and I understand that side as well. But it's interesting that all this has happened. Now we're thinking, okay, maybe that was the wrong move. We need to bring some of this industry back to the United States and rebuild and decrease the percentage of the U.S. economy that's based on the financial industry.
Yeah, I agree wholeheartedly with a lot of what John said. I think there's not a huge buffer for major pain. Like, Brady pointed out, stocks and the financial industry are a huge section of the economy, and huge section of tax receipts. What did surprise me, so I still think, I think the bottom for the S&P, 65-70% chance it's already in. If not, I think the bottom's in within a month or two. I really don't think this lasts too long. That being said, I was surprised that so I think something you're right, like 60% of US households own stocks, but of those households, most of them, it's like 5 to 10% of their net worth. They own very little. And it's a vanishingly small number of people that actually have 70% of their net worth in stocks. It's like actually insane. I looked this up after seeing that the week after the S&P was like down 10%, Trump hit like an all-time high approval rating. And that was my moment of like, there's no way. Like, people just don't own stocks. There's no way that this is happening. And most Americans have a nice chunk of their net worth tied up, and they don't. It's very interesting. So it's crucial for tax receipts and it's crucial for the economy, but I think it's a very small number of people. And so he may have a little more room with the strategy than I expect, but there still are hard limitations.
Yeah, I honestly, personally can see it going either way. In my opinion, the market has been a little bit over emotional with some of the announcements that we've seen. Just recently, I saw someone bring up the DeepSeek announcement that happened back in December, and all stocks started crashing, and it ended up being somewhat of a nothing burger. I mean, we haven't seen any major changes come from that. So, do these get put into place? People overreact, or is it already priced in? Truly could go either way. I could see things going down more, but long term, again, it's not something to be too concerned about, in my opinion.
Yeah. Name of the game this year has been so many panics like the DeepSeek panic. And that's what we just saw here. And that's what I was pointing out with the Fed meeting is all the real panic of this sell-off was there's going to be a recession, inflation's going to surge because of the tariffs, and then the Fed's going to hike rates, and there's going to be this trade war. And Powell basically got on stage and was like, you guys are idiots. That's not happening.
Yeah, people traditionally look at Trump as good for the stock market, right? So the fact that it's going the other direction is probably what's fueling some of that, emotional response.
Totally.
Also, what he said, what is now being termed Trump 1.0, right? His first term. I just looked this up the other day. I need to aggregate it and put it on Twitter. But if you just search his Twitter for Dow Jones or for S&P 500, he has a long list of tweets. Like literally, he's like, "Congratulations, American people! The Dow Jones hit a new record," and it's just a very different administration this time around. So. That was not that easy to forecast. So, don't beat yourself up over not necessarily getting that right here. But I am curious, what do you guys think about that April 2nd date when the reciprocal tariffs come in?
Yeah, it's interesting. So Trump has been very public. He's calling it Liberation Day. What does he mean by that? I have no idea, but it's provocative. It gets the people going. But how do you read that? I mean, read one is that it's just some sort of like Trump branding exercise, and he's just calling it that for really no reason. You probably have at least a 40% chance that that's true. Option two is that along with these tariffs, these reciprocal tariffs, he's also going to announce like tax cuts or like something positive and exciting. And this will actually be a positive catalyst. I'd probably say that's 30% and below. I wouldn't say it's the most likely case, but maybe it's something. And I know there's a lot of negotiation going on behind the scenes. So again, like when you're looking at these Trump tariff negotiations, you have to realize that it started out with 25% on Mexico and Canada. And basically Mexico played ball. I don't know how to pronounce her name, Scheinbaum or whatever. But the president of Mexico, she basically played ball with Trump and was like, "Oh, okay, what do you want? You want guards at the border? We're sending guards to the border. You want to like this, that, spending on, okay, fine, here you go." Guess what? Mexico has zero tariffs, basically. They're paying basically nothing. Canada had the opposite response. And they were like, "Oh, you're going to tariff us? Like we're going into a full trade war with you," which really Trump didn't want, is my take. They were a little taken aback. I think what happened, and I say this just descriptively, I think the Trump attack revitalized many political candidates in Canada that were going to lose the election. And because they were able to mobilize everybody against Trump, they're now in ahead. You had a real political upset where Polivier, again, I'm terrible with pronunciation, was winning at a huge margin. And then all of a sudden, once the fight starts with Trump, now Carney's got a 15% lead. So it really helped the Liberal Party in Canada. And so I think they just doubled down and it became, a war. But this gives you two models where once Trump got what he wanted, the tariffs disappeared on Mexico. So the question for April 2nd is how many people successfully negotiate behind the scenes? If it's a lot, it could be pretty minimal, especially because I actually think the reciprocal tariffs are pretty low compared to the 25% blanket tariffs on Canada and Mexico. And the reason is they're higher numbers. They could be like 50% on cheese or something, or 300% on cheese. But these are smaller categories. These are like individual goods at high ratios. So I think the total economic dollar amount of imports is probably substantially lower than these 25% tariffs. And certainly if you adjust that this is like the rest of the world versus two countries. So I think there's a lot of uncertainty on what it'll actually be, which, isn't a super satisfying answer, but like those are the questions.
Let's talk about Bitcoin's fundamentals right now. There's a lot of talk in markets about why is Bitcoin not moving and the back of all of these incredible fundamentals that have developed over the past few months for Bitcoin. What are some of those fundamentals? I think one is that's not really been talked about too much is that M2 is starting to rise again. That's always a good sign for liquidity to come into the market, and a lot of that ends up getting parked into Bitcoin. We've got Bo Hines, who is talking about, he has asked the question directly, let's just take a look at the clip. Here we go.
Already acquired about 200,000 BTC. That's worth about $17 billion. Strategy CEO Michael Saylor is suggesting that the US acquire up to 25% of the Bitcoin supply by 2035. What would be the target amount for the United States in your view?
I get asked this question a lot. And I think the answer to that, like I said at the summit yesterday, is as much as we can possibly get, so long as it's in budget neutral ways that don't cost the taxpayer a dime. I think we have a lot of high IQ people in the building that are working on this, and folks over at the Treasury office and folks over at Commerce, working with the internal working group that was set up in the first digital assets EO. We'll be able to come up with ways to accumulate more really over the course of the next few years.
I mean, there you go. It's clear now. This was the question, right? In my mind, the SBR was established. That seemed to be pretty well priced in, that this would happen and that it would basically secure and provide a legal framework on how to, responsibly handle and hold the Bitcoin that the United States had as part of legal cases and what was the word I'm looking for? They acquired it basically through forfeited, Bitcoin from legal cases. And so that happened. There wasn't much of a market response. I think the response to the United States saying, okay, we are going to acquire more Bitcoin should be a lot bigger than this. This is a fundamental development of Bitcoin that is out there. I mean, they're going to buy more Bitcoin. That is exactly what they're doing. That was not just an empty statement as part of the SBR. And you've got the Bitcoin Act, which is also gaining momentum, which is a law that's put into place and much more difficult to undo in a possible future Democratic administration that is somehow anti-Bitcoin. And we can talk about whether or not that is likely, but executive orders can be addressed and overturned in ways like the SBR. But if there's a law in place, far more difficult to repeal. So these are happening. These kind of fundamentals are happening. The network is stronger than it's ever been. Hash rate is as high as it's ever been. There's nothing different about the fundamental value of Bitcoin itself and the network itself to the world. And now we're seeing these very bullish fundamentals coming out from the United States, saying we're going to lead the world in terms of Bitcoin nation state adoption. We're going to become a Bitcoin superpower, and we're going to buy as much as we can from the mouth of the administrative representative on digital assets. Why is the price not moving, Stephen? Why is the price not moving?
Yeah, so this is such a wild moment. I will tell you, beyond a shadow of a doubt, no one believes them at all. They do not believe them. They've come out and they've said it a million times. They don't believe them. Now, I think they're wrong to not believe them. I think they're absolutely going to do it. And I've had the pleasure to talk with people very close to this issue, and I can confirm that these proposals are real. They're being circulated. They're being discussed. Exactly what Bo Hines said. There are numerous proposals being talked about from the Treasury, from the Commerce. The executive order said, you shall do this. Lo and behold, they're not defying the executive order. They're doing it. This will happen. But it is staggering how no one believes it. The traditional markets don't believe it. It's too outside the Overton window for them. They just probably look at it and see a crazy Trump thing. So they're blindsided. They think it's nothing. But what's really incredible is most of the crypto traders don't believe it, and half the Bitcoiners don't believe it. Like, very few people believe that this is going to happen. It's one of the biggest disconnects I've ever seen when they're coming out and telling you exactly what they're going to do. And let me be clear, there is one mistake.
Stephen, they're telling you exactly what they're going to do, and they've already fulfilled half of those promises, right?
Which is where I'm going with this next part.
Let's go, yeah.
The number one mistake that investors made this year, I saw it time and time again in traditional markets, in Bitcoin, is they didn't believe what Trump said. You saw this with tariffs. The market was fucking blindsided when the tariffs happened. And everyone's like, I didn't think he would actually do the thing he's been saying 17 times since he got elected. He did. I didn't think he'd actually free Ross, even though he committed to doing it multiple times in public. I didn't think he'd actually do the SBR, even though he mentioned it in 9+ different speeches. I didn't think he was actually going to shut down the Department of Education, even though he talked about it 13 different times. Like, you have to realize that if you bet against, it's just simple. It's not whether this is good or bad, you like it, you don't like it, but just the question of, is Trump going to do the things that he has talked about over and over again? And if you shorted that, if you bet against that, you were wrong basically every time this year. But for some reason, you think you're going to be right this time, that even though you have Trump saying it, written into the executive order, every official in the administration close to this saying it, Lutnick affirming it, Treasury and Commerce discussing it, you think that somehow they actually have no intention to do this. They do. They're out there. They're talking about it. They're doing it. And once it happens, you will see the market reverse in a hurry, because this is not priced in. The SBR, where they didn't sell the coins, was priced in. The market expected it to happen. This is not.
100%. I think it's totally fair, by the way, that people don't trust or believe, politicians in general. How many promises do they make that don't come to fruition, right? So it's reasonable that people have taken that stance, but there's too much evidence stacking up now that these things are going to happen. So you got to take a side.
And let me just add one thing. There's all of these people that their main response is like, oh, you're going to trust the government. Like it's some version of like, what do you mean believe the government? What do you mean politicians lie? Like, yes, politicians lie, but that's a totally insufficient heuristic to navigate reality, right? Like if you were to count up the number of times politicians lied and then compare it to the number of times politicians told the truth, you'd have some on both sides. There'd be sometimes they lied. There'd be sometimes they told the truth, right? And so then you have this secondary question, which is, how do you determine which one it's going to be? How do you tell when a politician is lying? And how do you tell when a politician is telling the truth? Then you have a third part, which is it a lie if they tried to do it and failed because they got blocked by other apparatuses of government? Well, I wouldn't personally call that a lie. I think a lie is they said they'd do it, they never tried, or they tried in an unserious way. It's not they tried really hard to get a bill through and it failed in the Senate. That's a different thing. Now, one of the reasons I think you should be bullish here is because the number of repetitions you're seeing, in my opinion, my way of parsing this information landscape, if Trump was not serious about this, you would have seen him talk about it once or twice and then basically shut up once the election's over. That's your signal. Your signal is that he talked about it when he was raising money and he shut up once he was president because he didn't need it anymore because he doesn't have another term. But the fact that he continued to talk about it, and they have pushed out multiple facets of the administration to talk about it, tells you that it's serious. It looks bad to talk about it 17 fucking times and then not do it. Secondly, you should, I think, lean on the side I'm leaning in that this is going to happen, because as long as they don't have to requisition money from Congress, he has the ability to do this without involving other people, because there is this real challenge of getting it through.
It is a limited amount of funds that can be accessed through the executive branch alone. So
Correct.
Point being, the Lummis bill really needs support.
Yeah, there are some funds. He can do billions. Like
he can do billions. Yeah,
that's the whole reason for budget neutral purchases. Budget neutral is code for I don't need to ask Congress for money. I can just do it. So, it's all probabilities, but I would relate to these statements dramatically different than like other politician stuff.
I think Alec has a good point that there are a lot of people out there who just have an inclination to say, I generally don't trust politicians. And it almost like seems too simple. It's like, oh, the politician's saying he's going to do this, but my investment thesis needs to be more complicated than that. There's probably many people like that out there. But then I think Stephen has a good point, which I liked a lot. That was like, all right, well, what about Trump on tariffs? Like, this is as real time as it gets. If you believed Trump on tariffs, then maybe you would have actually sold some of your equities, sold some of your Bitcoin before this. So that's a real time example where it's like, yeah, that actually was the case where you should have believed Trump. So I think that's a good point. Also, I think there's something to be said about, Brady, you were talking about the long-term thesis for Bitcoin, kind of foundational reasons to invest in Bitcoin. I think one of the reasons that, in addition to, this stuff not being priced in, like Steven was saying, I think it's just that Bitcoin is correlated to traditional markets. And I got this question from a group of clients that I was talking to earlier this week. And one of them just said, can you explain, why is Bitcoin correlated to traditional markets, particularly the equity markets? And this is a question that I've gotten a lot. So I would love to hear you guys chime in on it a little bit, because to people who, understand Bitcoin, quote unquote, understand Bitcoin, nobody understands Bitcoin, hat tip, Jameson Lopp. But, to the people who appreciate Bitcoin, it almost seems crazy. It's like, wait, the S&P 500 went down 5 or 10%. Why should Bitcoin go down, right? When I try to answer that question, I generally point to a few things. One is that Bitcoin is liquid, so it's easy to sell. If people just sense a turn in the market environment, they might sell some of their Bitcoin. There are a lot of leverage traders out there. If they have some leveraged position that needs to be covered, they can easily sell their Bitcoin at the drop of a hat. That's number one. Number two is that there is this perception that Bitcoin is a speculative asset, whether we like it or not. And large investors out there will treat it as a speculative asset. And that is kind of a self-fulfilling prophecy, at least in the short term. That's item number two. And then item number three would be, people are not 100% invested in Bitcoin, right? They have a portfolio of allocations. And I've noticed this firsthand a lot, that if someone's equities are down, I'm kind of referring to 2022 here, if your equity portfolio is down by 25, 30%, it's very hard to convince that person, hey, now is a good time for you to buy Bitcoin. They're kind of like on defense. They don't, even though that's a good time to allocate, usually, it's just hard to get that new incremental dollar coming in. So that's kind of how I've answered that question. But do you guys have anything more to add of this, like, why does Bitcoin go down when the stock market goes down question?
Yeah. So, I mean, it's that later point for me, that the second point you made for me is just that you need to realize that Bitcoin exists in a universe of other assets. Let's say the average Bitcoin investor has 5 or 10% Bitcoin. The rest is stocks. Like, most people are not all in Bitcoin. Like, those are the guys that probably aren't selling. And so, like, if you're running into the tariff launch, right, and you're bearish because you're like, holy shit, he's going to do this. He's actually going to launch these tariffs and the market's going to freak out. So then you go into risk off mode and you're saying, oh, I need to be like protective here. Bitcoin's one of the more volatile things, so it's going to go down more. That might be one of the first things you sell. You're protecting your portfolio. Similarly, once the drop's already happened, maybe you're getting margin called on a position and you need to raise money now. So you're selling across your asset portfolio. And even maybe you're tactically bearish before the tariff launch. So you're looking for something to short, and you short Bitcoin. There's suddenly an incentive to short it. I think it's unreasonable to expect Bitcoin to not trade as a larger part of like asset universe in the modern world. Even gold during these days where everything sells off, and it's a defensive asset. Like, this is the point I'll always make. On the days that were really panic capitulation in the stock market, gold was down 3% that day. There's nowhere to hide when these things come. And asking the question of like, when will Bitcoin decouple from this, it misunderstands the structure.
I also think part of it is people's understanding of Bitcoin, or appreciation of Bitcoin in certain ways. I think the appreciation of Bitcoin as a store of value, as an established long-term store of value, and not just a speculative store of value, that understanding is growing for sure, especially with Bitcoin treasury strategies and that kind of education that's happening in the corporate world. It's also happening at the nation state level. This is an asset, a strategic asset. We should hold it for 20 years minimum, as is in the Bitcoin Act. Those ideas are there and they're becoming more established, but there's still a lot of investors who treat it like a stock, like an equity. And they want to see they're denominating their gains in dollars. They're not thinking about holding this percentage of the network forever, for decades. They're thinking about making dollar gains, and that's going to continue to change as we go up that adoption curve of an established store value. So I think, but there's still these quite a few people who are just trading based on dollar denominations, and that's going to continue. But I think as Bitcoin becomes more established as this uncorrelated long-term store of value, as a safe haven asset, then you'll just, see that sort of those drops when, equity markets are panicking, I think will start to diminish, and it'll become, more like gold, and maybe even, more stable than gold in times like that, or maybe even, go up, as people move assets from these kind of short-term dollar-denominated assets to a completely, perfectly scarce asset that can't be debased in times like of economic trouble, where money printing is a very predominant solution to sort of quell the markets.
I want to drill down in that a little bit, because I think this is good for people to understand. So there are times where the US market sells off and gold goes up. And there are times when the US market sells off and gold goes down. And like that's the needle we're threading here. When like the US market sells off because of certain war fears, certain types of fears, gold can rally on that, and it does happen. But not all times that stocks sell off does gold go up. Sometimes it goes down. The defining factor for where it goes down is basically where it's just like a market-wide margin call. It's just like a market-wide liquidity risk fear crunch. And in those moments, I think you could see Bitcoin's volatility go down. It could drop less, but I wouldn't want people expecting that it's going to somehow go up anytime the S&P goes down. You also don't want that, because the S&P pretty much just goes up over time. And if Bitcoin only goes up when the S&P goes down, you have a problem. But like, I would love to see Bitcoin should rally if there's a bank crisis, if there's foreign tensions, if there's capital flight from other countries. Those are things that are bullish for gold that should also be bullish for Bitcoin.
Yeah, and we're getting there. It's just a matter of time.
But before we leave this topic, I agree with that. I just want to offer one scenario that I think is interesting that could play out this year. Let's hypothetically say the tariff talk heats up, stays hot, uncertainty stays with us for weeks, if not months. The Trump administration is willing to tolerate more of that pain that we talked about than maybe most people realize. So let's say equity markets stay flat, volatile to the downside. Just imagine that for a second. Now, also imagine that they find a budget neutral way to buy $1 to $5 billion worth of Bitcoin. That would, to me, would be the most fascinating market outcome to watch in 2025, because all of those macro wins are headwinds for Bitcoin. But then you have the idiosyncratic announcement of, oh, look, David Sachs and Howard Lutnick and Bo Hines, they figured out how to buy $2 billion worth of Bitcoin budget neutral. The US is serious about this. That's the scenario where you could see equity market weakness and Bitcoin rallies in a major way. I would love to see that play out just for the experiment of it this year.
100%. I think that's what, all the large players have been talking about as well, right? The first thing that came to my mind was Larry Fink saying Bitcoin's a flight to quality. I just don't think, to Brady's point, that people understand that in general. And we have a whole nother layer of participants now with these institutions and corporations. So I think it's going to be interesting to see. I saw some comments talking about the cycles. I think that plays into how these cycles work out in the future, as well as just we have a whole different level of participants in Bitcoin, and it's going to be exciting to see what plays out this year. I agree with everything you guys said.
Should we spend a minute talking about the new strategy Bitcoin financial product called Strife, STRF? First, I heard a cool take that you've got Strike because there's a, kind of the strike price of the at that product. But then this, which Strive is an interesting choice, right? Because it's like struggle. I heard that maybe Saylor chose to take that ticker symbol because this is a speculative attack against the dollar using the bond market. and there's some kind of struggle or strife that's happening there in that particular asset. I don't know. It doesn't seem to fit perfectly to me, but I sort of like the idea. Let's kind of break down what this actually is. Ben Workman sort of describes here the numbers behind this perpetual preferred stock offering. And they did upsize the deal from 500 million, which was the original announced intention, oversubscribed. $722.5 million was upsized today. That was announced. The offering for Strive was upsized to 8.5 million shares being offered in the IPO at $85 with a 10% dividend. Crazy. Based on the $100 liquidation preference value, which is a dividend fixed at $10 per share. So this gives an initial yield for this product in the IPO at 11.76%, which is an incredibly high initial yield for a bond product. What do you guys have to say about, here's a great tweet from Pierre as well. On the left side of the curve here is risk averse. Spot is too volatile. They want downside protection, talking about strike. And then the BTC maximalist is just hodling spot exposure. And then on the right side of the curve here is risk seeking. Spot is unrewarding. And these people want upside leverage. So there's kind of three products that span this risk curve. And now we've sort of completed both sides of the curve now with the Strife product.
I could give the big picture take on this from me is that this is MicroStrategy continuing to tap the capital markets or mine the capital markets, as some people have said, with these Bitcoin linked securities, whatever you want to call them. The reality is there are different pools of capital out there that have different mandates. They have different investment policy statements. They're kind of ring fenced as to what they can invest in. And MicroStrategy has figured this out by starting off by issuing, just their equity. Hey, we're a company that's going to buy some Bitcoin. Do you want to buy our equity? Then they go into regular way corporate debt. Then they go into convertible debt. Then they go into preferred. Preferred is a hybrid security. It's got equity and debt characteristics. So they're doing different types of preferred. Some can convert into equity, some cannot. This latest one, Strife, does not have the upside of convertibility into equity. So the target investors here are the people who are seeking a high level of yield. They're okay not having the upside. I love the Saylor had some quote. He was like, haters are going to hate. The convert arbs are going to arb. And, he's just like has something, option traders are going to trade options. He is literally creating this leveraged Bitcoin equity vehicle company that it has something for everyone. He's just keeps on providing new capital, new securities that people can invest in based on their mandate, based on their goals. And Strife is another example of that.
Yeah. It's a very conservative product for people that want a little bit more upside with much less risk, and they're going to see where the demand falls.
I'd love to see it. I know with the 21-21 plan for strategy directly, we saw kind of a decrease in buying. A lot of people are like, why is it, he's only buying the top? It's nice to see that, they are working, they are building other products, they are acquiring more Bitcoin through these different avenues. So, it's just a broader part of that long-term strategy for them. And yeah, I'd love to see the diversification with different vehicles happen, but fascinating stuff.
Yeah. What people don't understand is that Saylor's cost of capital is lowest at tops. And this is what people don't get. It is cheaper for Saylor to buy the top. Like, people need to get this through their head. If you can sell $3 or $1 of MicroStrategy shares for $3 of Bitcoin at the top, and you can sell $1 of MicroStrategy shares for $1.5 of Bitcoin at the bottom, of course you buy it at 108. If you get twice as much, then you get half as much and you buy it at 80. Like, the math, dude. The math's not mathing.
Math.
It's cheaper for him to buy the top. That's why he buys the top. End of story.
Totally.
All right, great up, guys. We got to wrap it up. I found this Friedman clip, and there's these great clips from Austrian economists of the last century that pop up on Bitcoin Twitter from time to time. There's I can think of many of them. I hadn't seen this one in quite some time, so I wanted to share it. And it's a very strong take on inflation, and I think Bitcoiners have been trying to communicate this for quite some time.
Inflation is the most destructive disease known to modern societies. There is nothing which will destroy a society so thoroughly and so fully as letting inflation run riot. Inflation doesn't arise because you got consumers who are spendthrift. They've always been spendthrift. It doesn't arise because you've got businessmen who are greedy. They've always been greedy. Inflation arises because we as citizens have been asking you as politicians to perform an impossible task. We've been asking you to spend somebody else's money on us, but not to spend our money on anybody else. Everybody talks against inflation, but what he means is that he wants the prices of the things he sells to go up and the prices of the things he buys to go down. The real tax on the American people is not what you label taxes. It's total spending. If Congress spends $50 billion more than it takes in, if government spends $50 billion, who do you suppose pays that $50 billion?
Of course.
The Arab sheiks aren't paying it. Santa Claus isn't paying it. The Tooth Fairy isn't paying it. You and I, as taxpayers, are paying it indirectly through hidden taxation.
This hits home for me big, Brady. I got to say, this was like a huge white pill moment, if you will, for me. The Milton Friedman Free to Choose series was on YouTube when I was a college senior in like 2008. And I just consumed it nonstop. And I was like, this is phenomenal, better than the classes I'm taking. So I've seen that clip many times, and it was just a huge, huge learning experience for me. That kind of launched me into like the Mises Institute and sound money stuff. Huge fan of Milton Friedman. That's a great clip.
Absolutely. Thanks, guys, for another fantastic show. Everyone, check out Swan at swan.com. You can download the app in the App Store. Just search Swan Bitcoin. We provide Bitcoin financial services, Bitcoin wealth management, and advice, I should say. John and Alec and Steven are all on the Swan Private Wealth team. The cool thing about Swan Private is you get a direct connection to a dedicated representative, one of these three guys, or one of the several other guys that are on the team. And you also get access to exclusive events. We do Swan Salons, which are a little bit more formal gatherings where we have a presentation from guests. We also do Swan Happy Hours. We've started those recently. Those have been super popular. We've got content that you can get as exclusive as a member of Swan. We do all kinds of things at Swan Private, and really what we do really well is just build strong relationships with clients. We get to know them really well so that we can work with you for the rest of your life on building your wealth using Bitcoin investments. And I think it's amazing. We get so many great testimonials, responses from our clients who have developed a really close connection with these guys. And if you guys want to say a quick word about Swan Private and your experience, would love to hear it.
Yeah, no, thanks for that shout out. I've built and run the Swan Private team since day one, and it's been such a pleasure to work on this at Swan and work with our clients. There's very few places in the market where people can get expert advice and work one-on-one with people that are actually knowledgeable about the Bitcoin world. In the financial services industry, it's very common to be able to pick up the phone and call someone. You can't do that at Coinbase. You can't do that at the exchanges. And so we wanted to build something where you could do that. You could pick up the phone and you could talk directly to three of the people on this call and others. So, been a pleasure to be part of it and appreciate the shout out.
Yeah. We've had huge success with Swan Private, and we're really excited to watch it grow, especially as we head into this bull market. So go to swan.com to check out our offerings. Go to or search Swan Bitcoin in your app store to download the app. We will see you next week, same time, 11 a.m. Pacific, 2 p.m. Eastern. Have a great week and happy stacking.
Vote for Steven. Maxi Madness, Bitcoin Bugle. Get on Twitter. Use your real account. Use your NIM. Use your other NIM. Vote for Steven.
We gotta catch up with Jeff. All props to Jeff too. It's a tough matchup for you, Steven.
I know. We'll see how I do.
All right.